Hola. Hola, compadre. How are you going today? Welcome aboard. It's Walter Peters here from Naked Forex. We're going to talk about naked Forex patterns today. We know that there are three ways that we can find consistent profits. Number one, we can trade a system that has a positive expectancy and that we believe in. Number two, we can set up our risk management rules so that they make money for us and help us achieve what we're trying to achieve. It could be a certain amount of money every week, every day, every quarter, every year. It could be a certain um, dollar amount that you're trying to grow an account, like we are going to do in the small account big profits course, taking a small $1,000 account, shooting for 100,000. So that's another way that you might do it. You can click, by the way, if you like this stuff, you can click the link below or above to get into small accounts big profits course. It's still open. And then the other thing is the psychology. So if you've got a system you believe in and then it makes money, and then you've got the risk rules so that you avoid your drawdowns and reach what you're trying to reach, then finally the psychology. So keep executing that strategy. And the best way I know how to do this is to convince yourself that it works. And so I like to use simulators. Let me show you the Forex tester simulator here. And you can see how this works here. Cool. So you should see my chart here. I'll zoom in so you can see a little bit better. This is the old Euro. Actually, you know what? I'm gonna delete my face because I want you to be able to see this. So it's just gonna be this, just the chart. That should be better, hopefully. So one thing that I like to do is I test different patterns, like in the Naked Forex book. If you read that, it has a lot of that stuff in there. But I'm always kind of looking at, okay, what about this? What about that? The biggest thing I've noticed to make a system work is to have a really good exit strategy. You can make a system profitable if your exit strategy is pretty good at capturing big wins. If you can do that somehow, however you want to do that, that can be just going for big wins and only taking a winner if it's 5 times the amount of risk or what have you, or you can use a trailing exit to help capture those big wins. But that's the easiest way to do it. So what I want to do here is I want to show you, this is the 8-hour Euro or Aussie, Euro. And what I'm going to do here is I want to show you, if I can find one, a system. Actually, there's one right here, but that's too late. That it's really no pattern. So it isn't a candlestick pattern per se. It isn't a naked Forex pattern per se, but it is a way of hooking into turning points. And you don't need specific candlestick patterns. So, for example, what you do is you go to the line chart like I have right here, and that enables you to just look at these really sharp bends. So, for example, here's one right here. See how I've broken through the floor here where there was support and support, and then I came back up and hit it. This is obviously like a pinch trade. One of the advantages of working with traders around the world is you learn a lot of cool stuff. And my friend Dennis turned me on to this, and Dennis is an excellent trader. This is called the pinch, where you break through a floor or a ceiling and you come back up and hit it. So what you do, but you could have seen this from a different perspective and said, you know what, this is actually just a bend in the line chart. So that's what I call these. I call them bend trades. And what you do is you simply just put your sell stop below the candle here, put my stop loss up here, and then we just roll the dice and see what happens. Again, I don't know what my risk is on here. What's my risk? My risk, it looks like my risk is about 60 pips on this, 62 pips. Hey, that was almost 61.8. We'll say that my risk is 61.8 pips, just to keep Fibonacci in mind. And then what we'll do is I'll place the order. Now, if it falls through, that means that this turning point is going to look pretty good. That this bend in the chart, and it has to be a sharp bend. So the second candle has to be really, really bullish or really, really bearish, which is what we have here. Otherwise, I wouldn't take the trade. So, for example, I wouldn't take a bend trade on something like this over here because that's kind of flat. You want the sharp moves like that one, or maybe that one right there. So that when you see these sharp moves, it tells you that the second candle was pretty bullish or pretty bearish. So let's see here if this one's going to go. It does, and it doesn't, and it's going back. And we've got another pullback and then follow through. So it looks like this trend is going to keep going lower, hopefully. And I'll move my stop loss to break even now because we've seen it go about 1R. Now, if I get another bend trade, I'll take another one. I don't have one. Okay, I'm just going to trail this sucker because it's looking pretty good. So I'm just trailing it above the swing high here. Okay, this could be another one. It doesn't actually probably going to look, it looks okay. See how it's come up here and it's bent down? It would have been better. The reason why I like it is the market's in a trend. So I really like that. But if it pulls lower here, it's going to look really good. If it doesn't trigger this, though, I will just remove my order. And my stop loss is up there where the other one is, basically. Well, if this doesn't, okay, it did go. I was going to say, if this doesn't go, then I'm not going to bother with it. But now it's in a sort of a consolidation box, but we're right up against the floor, and we're probably going to break through. Most likely, maybe, somehow. Yes, good. All right, cool. So now what I'll do is I'll move both of those trades down here. So we're basically at break even on this one. See if we get another bend trade. Wow, this is actually really good. The bad news is I don't have any other bend. I don't have any other bend trades here to go with. Okay, that could have been one, but I kind of skipped by it. And also, I don't know if this is support, so I probably wouldn't trade that. I like to. Okay, so the trade's over on that one. I like to have a really nice support or resistance level before I get in on one of these. Let's see if we can get another one. So those trades are over. Let's see if we can find a really nice level. I would probably draw a support level down here because of the bounce, and maybe we'll come back down here, or maybe we'll come up here where I would draw some resistance up there. So we might get a bend trade at either of those at this stage. No. Oh, okay. Wow. This is an awesome trend. Too bad I didn't get in on it. Oh, wow. Okay. All right. Again, I would probably draw a floor down here and just wait and see. Are we going to bounce here, or are we going to bounce up here? A bend trade at either spot would be pretty good situation if I can get one. Again, the bend trade is you're gonna see it by the really sharp line chart, the really sharp trend on the line chart. Let's see if we get one. Yes, sir. Okay, so now look, line chart, look at this. That's a beauty. Now, I would not be surprised if it retraced quite a bit here because it's such a big candle, but this is exactly what I like them to look like. Really, again, this doesn't really necessarily, well, I guess it could fit maybe the big shadow pattern, naked forex pattern, but this is really more about what the line chart looks like than anything, and the fact that it's on support here. So I would buy here, stop loss down here, and when I'm in and see how it's retracing, that's what I was talking about. I wouldn't, a lot of times when you get massive candles, the retracement's part of the deal. Like that's just part of what you're going to have to. Here's another one right here. Potentially, let's see. I could just put my buy stop again. I put my buy stop above the candle. Even though the line chart is the signal, the candle is the sets me up for the stop loss. Okay. So I'll move my stop loss up here on that first trade. I reduce my risk, and then we're all out. Okay. So I made money on the first one, and then the second one was a bit of a loser. But you get the idea. So that's basically how the bend trade works. What I'm trying to do here is I'm trying to find a reason to take a trade that's different to what we see normally. Normally, I'm looking for patterns. Normally what happens is you'll see like the big shadow or the kangaroo tail or any of the patterns that are in the book. They're all candlestick patterns. These are all candlestick patterns on support resistance. What we're doing with these bend trades is we're just saying, look, this is a really strong level of support and resistance, and I want to trade that level. So how can I trade that level? The easiest way is to look at the line chart and say, is the line chart telling me something? Remember, the line chart is just a 1 period moving average on the close. That's all it is. It's nothing more than that. It's nothing fancy. And so I'm basically saying, yep, the market's going in my favor here. It's starting to bounce off this level. So I'm going to put my order above that candle or below that candle. That's all it is. So I hope this helps. We'll definitely be trading bend trades in the Small Accounts, Big Profits course. You can click the link below or above to get in on that. I wish you happy trading, and we'll see you soon. Take care. Bye. See ya. Bye.